Hi friends, welcome to Konexio Technical Insight. I am Rahul Randeria and I will be conducting today's show. Today we would be discussing regarding the trends, the setups, the technical indicators, the candlestick patterns on the different asset classes. Now first of all, discuss what we have mentioned in our earlier videos. In our earlier videos, we have mentioned that though the Indian markets are into a time correction, it has taken a long time since last 7 to 8 months. I mean to say, to be precise, from October 2021, markets has been correcting from those particular highs of 18,600 and till then or till today, it has been correcting. This is a time correction where prices will take more time to drift from the higher levels, and we would see high volatility or high huge swings coming into the markets in the coming days also. But looking at this current sell-off of last couple of in the last couple of weeks, and we have seen that some sort of exhaustion was seen in the selling intensity. Markets are trying to make some kind of short-term bottom, and it is well poised for a counter rally or a pullback rally or a short-term rally from these levels. So, looking at this setup, we feel that maybe next 3 to 4 months or 5 months, maybe till October, November, we feel that market would remain in good condition, good shape. Yes, there might be huge volatility coming into the markets in this particular journey from here from today or maybe from current levels to maybe next 4 5 months, because the reason behind that is not technical, but the global geopolitics is slowly and gradually cooling off. The global central banks are taking necessary steps to curb the inflation. Crude and natural gases are also cooling off at particular highs. The US bond yields are also cooling off. So these are the major factors which are indicating. And yes, last but not least, the global VIX, I mean to say CBOE VIX as well as Indian VIX, is also looking at some sort of cooling off from these levels. So VIX cooling off, which clearly indicates that market would trend higher from these levels. So these are some of the factors other than technicals which are indicating that market has or in a process of making short-term bottom, and it is poised for a decent rally from these levels. So we had and we have been commenting since last couple of weeks that we have a target of 18,000 in next 4 to 5 months, or maybe mostly we are expecting this target to be achieved maybe in the September or October mark. So our strategy would be buy on dips and for overall market trend. So now let us go to the Nifty daily charts and we'll figure out what is the technical formation, and we'll try to figure out what could be the trend for the next week. So this is a Nifty daily charts, and we have been discussing regarding you know Nifty taking support around this multiple or what we call as major support zone. Let me draw a horizontal line so that we will have a clear view about this particular support. So this was the cluster zone we had, which we have been discussing. Again, that similar level, Nifty has taken support. It has taken a pause. RSI is also showing some sort of positive divergence. I will show you that when prices were making low tops, RSI is making higher tops. See, RSI price is going down, but RSI is not breaking. And as we have discussed earlier, also that multiple times, whenever RSI has tested this support line, you can see market has bounced sharply. You can see over here, RSI taking support. This was the rally. RSI taking support here. This is the rally. It has taken support here, some sort of short rally. Support here. This was the rally. Again support here. It was the rally. Again taking support at the particular same levels. So now let me draw a parallel channel, downward falling parallel channel. So still Bank Nifty, Nifty has been moving in this particular downward falling channel. It needs some force to break these levels. And looking at this pattern, that we are some sort of little bit confidence that is growing into the markets, that the market are poised to break this particular downward falling channel, and it might rally towards this multiple resistance area which we have shown in our earlier reports or earlier uh, uh, videos. It's taking some time, but this was the trend line which we have been discussing in our earlier report also. So most probably, uh, Nifty might test those particular levels, and yeah, yeah. This was the trend line which we have been discussing. So almost we have been witnessing the target of 17,700 to 18,000 mark. So this is what we have been observed since last couple of weeks. And looking at this particular pattern, we feel that market are poised for an upside rally from here. Now let us see. On Friday, Nifty has made a hammer with a very long shadow, which clearly indicates that strong support has been seen at the lower levels, and we might see Nifty inching towards the level of this particular resistance trend line. And most probably, it will break in coming weeks, maybe 2 or 3 weeks. Nifty is poised to break this resistance trend line, and it would start its upward trajectory towards the target of this particular level of 17,700 to 18,000 in next 4 to 5 months. So now let us go to the supports and resistance level for the next week. The important support in the Nifty for the next week is placed at 15,511 is the first support for the next week. Second support in the Nifty is placed at 15,367, while third support is placed at 15,191. These are the three important supports for the next week. Whereas on the upside, the first resistance is placed at 15,927. Second resistance is placed at 16,006, which is a psychological mark. Once it breaks there, then Nifty might be out of the woods. So the third resistance would be 16,172. So these are the important supports and resistance in Bank Nifty for the next week. So now let us discuss what we have observed in Bank Nifty. Let us go to the Bank Nifty chart. So in Bank Nifty, also similar kind of pattern has been formed. This was downward falling channel. I will draw it. Now let us first draw the horizontal line which will give us a clear view. Now see here, it is clearly a double bottom here, here, and these are the multiple bottoms. Many times RSI, you can see, has given breakout. Bank Nifty has rallied. Here you can see the breakout, positive divergence, prices were going down, RSI didn't go down, then a rally, again coming back to those particular support area, again a rally, again coming to that particular area, have seen a rally, and same particular pattern has been formed. Multiple support zone, double bottom in Bank Nifty on daily charts. It's clearly indicating that something, uh, I mean to say, a big trend is going to emerge or might emerge in the coming months. So one needs to buckle up, avoid going aggressively shorts at these levels. Try to buy every dips with strict stop losses. Yes, looking at the uncertain global politics, which is cooling down, but we might see negative news is coming every now and then. But market are expected to climb the walls of worries. So the strategy would remain buy on dips. Now let me draw a parallel channel so we can have a clear view about when would be the breakout of this particular downward falling channel. Now you can clearly see this is the last three trading sessions of Bank Nifty. So this was maybe on Wednesday, Thursday, and Friday. It was just exactly what we call as a range bound trend. Now the major resistance area for Bank Nifty is 33,660. So once it breaks, then swing traders should go long with a breakout for an upside target, at least for the next week. So looking at this particular pattern, we feel that the trend might remain positive or will remain positive. Any dips should be used as a buying opportunity. Now let me just show you a weekly charts. This is some kind of range bow candle of last 3 weeks, or we call it as a sandwich pattern, where first week was red, then again in next week Bank Nifty tried to move up above. Third week again red candle with what we call as an open high. Again it was a red candle, but this is not an exact a sandwich pattern, but as it we can consider it. Whenever such kind of candle appears on larger degree frame, maybe weekly or monthly, whenever the middle candle would be the trend of the coming weeks or months on whatever degree charts we have observed this kind of pattern. So this is indicating that we might see Nifty breaking this channel, will move into other trajectory, positive side, and we might see maybe a rally for next 3 to 4 months from these levels. Yes, as I said, the journey would be highly bumpy, so one needs to be trading with strict stop losses. So again, the strategy for the next week would be buy on dips. Now let us discuss the important supports and resistance for the next week. For the next week, the important supports are placed at 33,333 is the first support in the Bank Nifty. Second support would be around 32,926, and third support would be around 32,652. Whereas on the upside, the first resistance would be around 33,745. Second resistance would be around 34,147, and third resistance would be around 34,346. So these are the crucial supports and resistance level in Bank Nifty for the next week. So the view looking at the global setup, global indicators, technical indicators on a domestic market also seems to be positive. Any dips should be used as a buying opportunity. Now let us go to the third segment of our show, which is option analysis. In option analysis, we'll try to figure out, where is the focus of the smart money in the options segment of Nifty calls, puts, Bank Nifty calls, and puts. We'll try to figure out, you know, the data and what could be the trend. Accordingly, we will try to figure out what could be the trend for the next week. So let us first discuss Nifty options in Nifty calls. In Nifty calls, the action was seen in 15,900 calls, then 16,000 calls, then 16,100 calls, and 16,200 calls. Now here you can see there has been a rise in the open interest. The volume is also rising, but there is a minor drop in what we call as option premiums, which indicates that some sort of you know optimism might be there, or those who have uh, what we call as were cautious in the past week might be waiting out for particular breakout, and then they will start buying. They might start buying uh, Nifty at the lower levels. So the implied volatility is just between 17.71 and 17.72. As I said, we might see some sort of cool off, or if there is any kind of cool off, one should buy at the lower levels, because here, looking at the option, we feel that might be the smart money might be waiting for some decisive breakout, because on Friday some sort of exhaustion was seen, but at the later part of the day we have seen that Nifty started rallying from the lower levels. So maybe if on Monday the US markets are going to be closed because of their Independence Day, which is 4th July. So our markets might open with a positive gap. Again, it might cool off on intraday basis, and might be in the second half. We might see rally coming in from the lower levels. So any dip should be used as a buying opportunity. Now let us go and see what we have observed in Nifty puts. You will see on the screen that in Nifty puts, the action was seen in 15,700 puts, then 15,600 puts, 15,500 puts, and 15,400 puts. Yes, there was action in 15,300 puts also. There has been a rise in the open interest. The volumes are also very strong. You can see in the volumes segment, you can clearly see the implied volatility is between 19.36 to 21.08. Implied volatility is little higher. That may be because you know uh, people might have uh, done nifty put writing. That is the reason why we are seeing that the markets are going slightly and slowly and gradually on the upward trajectory. So maybe this is indicating that smart money might have started looking out for writing the nifty puts, which will push nifty on the upside. So any dips should be used as a buying opportunity from these levels. So now let us go to bank nifty option data. In bank nifty call option, the action was seen in 33,700 calls, then 34,000 calls, 34,200 calls, and 34,500 calls. Now here you can see there has been rise in the open interest. Implied volatility is shooting up. Then you can see the option premiums are also shooting up. This might be because the smart money might have done call writing, out of the money call writing in the past week, or maybe on the expiry. So that is the reason why we might have seen this kind of sharp short covering coming in the last fag end of the market on Friday. And the reason that we have seen that implied volatility is shooting up, then option premium are also going high, and again we might see that the smart money or people might have started buying nifty call or bank nifty call option because they might be turning bullish, looking at the last fag end of the markets on Friday. So this is also indicating that the markets are bullish. Nifty Bank is especially bullish because, as we have seen, the last three trading sessions were moving in particular congestion range, and once we see a breakout that is 33,650 or 37,000, sorry, 33,700 mark, that we might see a sharp short covering coming into the Bank Nifty. So one needs to be cautious if anybody is short in the markets or specifically in Bank Nifty. Now let us see what we observed in Bank Nifty puts. In Bank Nifty puts, you will see on the screen the action was seen in 33,300 puts, then 33,000 puts, 32,800 puts, and 32,500 puts. Again, you can see there has been a drop, a significant drop in option premium. There has been a rise in the open interest. The volumes are also rising. Implied volatility is also rising. And as I said, smart money might have started writing Bank Nifty puts, which is clearly indicating that the undertone of Bank Nifty is bullish. And again, the Bank Nifty components, the maybe HDFC Bank, Kotak Bank, SBI, then Axis Bank, and other banks might see rally coming into the markets for the next week. So one needs to be bullish on Bank Nifty. Any dips should be used as a buying opportunity. So, friend, let us come to the final segment of our show, which is positional call. I have identified the stock which has recently came into limelight in the last couple of months. The stock which was not performing since couple of call months or weeks, but not weeks, but couple of quarters. But in last 7 to 8 months, the stock has rallied very sharply, and specifically on Friday, when Reliance was going down sharply, that particular stock was holding on to the index. The name of the stock is ITC. Let me show you the chart of ITC, so we'll have a clear view. Let us go to ITC chart, daily charts. This is ITC. You can see the sharp rally coming into the stock on Friday. It has given a breakout of last, maybe a consolidation of last 2.5 to 3 months. If you see the overall charts on the weekly basis, the stock is poised for an upside rally, and it is poised to test the level of this particular 322. Now let me draw a trend line so we will have a clear view that since last 1.5 2 years the stock has been moving into an upward trend with high volatility, and stock has tried to move or climb all sort of worries, and again it is on a verge of a breakout. So now here we can clearly see that stock since March 2020 the stock has been moving uh, into this upward rising channel. It is on a verge of a breakout. Even if we see, we have seen a flag formation. The stock is on a verge of a breakout. So, clearly looking at this pattern, we feel that the stock has potential to give decent returns in long run from these levels. But as we have seen that on Friday, the stock was has rallied sharply. Maybe four. It was 4% positive. So we feel that long-term investors, positional investors, should start buying this stock not at these levels but on dips. We are expecting a breakout of this channel. The breakout would be around just about maybe 295. But looking at this particular overall pattern, we feel that stock is well poised for a long trend, positive trend from these levels. So those who wants to invest, those long-term investor can accumulate the stock on dips to 275 for an upside target of 320 to 322. Any dips should be used as a buying opportunity. So the stock is looking positive. Long-term investors, positional investors, swing traders should buy the stock and should have the stock in the portfolio. Yes, this stock is little slow in moving, but it is again a defensive stock which might give a balance to your portfolio against the high beta stocks. So definitely one should buy on dips to 274 for an upside target of 320 to 322 uh, for long-term horizon. So let us conclude the show. Any suggestion you can give in the comment box, and have a nice trading week. Thank you.